Hey everybody, it's Brian Shannon from alphatrends.net. Today's Friday, the 5th of August, 2016, and the market finished at all-time highs here for the S&P 500, bringing the gain for the year to 7% after climbing 0.5% this week. NASDAQ, all these markets gained ground except for the commercial real estate index and bonds. So we'll take a look at the action on the charts and go from there. We're in a bull market. We have a rising 10, 20, 50, 100, 150, and 200-day moving average. That means we're in a solid uptrend this week. We saw a little bit of a shakeout, and it held above prior resistance, and then the buyers regained control here, and it came to meet the objective we spoke about a couple weeks ago at 218. And just to refresh your memory, from this low, which we're just calling 199, up to here, which is 210, that's 11 points, point A to B. Point B to C is the pullback, and that brings us to 207. We then add those 11 points to the 207 and come up with a price objective of 218. So now that that's been met, of course the market is always a moving puzzle here, and now we have to look at what's next for this market. Well, again, we're at all-time highs in the S&P 500, so there's no potential for resistance, meaning overhead supply from people in S&P 500 stocks looking to break even. Instead, what we have to do is continue to focus on defense. This week we saw the the pullback that we had seen this week left us with a pretty good important level to keep an eye on and monitor going forward. So when we actually take a look back to this level right here, which was the July gap, you can see we got very close to that in terms of a volume weighted average price level. The market did break down through support, and as I had mentioned on Twitter and on StockTwits, that we were going to watch for the potential of resistance at that prior support. That's why we call it potential resistance. Just because we're below it doesn't mean it will in fact become resistance. And instead, we got back above that level. I also said we needed to see it back above the 5-day moving average. And last night, I had mentioned that now it looks like the buyers are back in control here. And sure enough, we have follow through to the upside. One of my favorite phrases is news and surprises tend to follow the direction of the trend. Notice the key word there, trend, tend rather. Just like resistance tends to act as support tends to act as resistance, it did not do that. But this case, we see that the market is higher, and now what we're going to be looking for next week is this band of prior resistance to hold as support. So I think 217, 217.25-ish, that's going to be our initial level to keep an eye on, and as long as we remain above this rising 5-day moving average, we are still innocent until proven guilty on the intermediate term, and with it above all these longer term moving averages, we're also innocent until proven guilty on the longer term time frame. So very constructive action for the S&P 500. If you're short, you're obviously wrong, and it's, I'm not sure what it takes for people to recognize when they are wrong, but being up too much is not a reason to sell short. We see that the NASDAQ is up, still also above its rising 10, 20, and 50-day moving average. It can't even break below a 10-day moving average for more than about 15 minutes. And on the weekly chart, you can see that we did break beyond this prior resistance from last year, and we've been above it here for the last week and a half, and we maintain above that level. So buyers remain in control. You can look at it and say up too much. You can look at it and say it's overvalued or whatever, but the truth is it doesn't matter. The volume doesn't matter. Only price matters. Your opinion doesn't matter. How you interact with price action does. So we saw that the 5-day moving average was briefly violated this week, and that put us on caution. It did not get us bearish because it was still rising, and we still had the ability to hold above this support. In this area, I was very cautious, thinking that if we were to break down from this level, then it would most likely lead to a deeper pullback. If did not happen. Instead, X happened instead of Y, or Y happened instead of X. And what we saw was that support held, and we are now at new highs for the NASDAQ for the last several years as well. And we're approaching in the Nasdaq 100 the all-time highs up near 120, and it seems reasonable that we should be able to continue there. But it doesn't mean you just hold until it gets there and decide to sell. It's if and when it does get there. Instead, what we want to do is continue to monitor the action on the intermediate term time frame and say, as long as we have higher highs and higher lows, and we have a rising 5-day moving average, it's innocent till proven guilty. The buyers are in control. The Russell 2000 came down and tested some key support this week at this 119 level. I was prepared to become bearish if it broke down from that level. That did not happen. Instead, what we saw was that support was tested, it held, and now we're back above that 5-day moving average as of Thursday, and today we blasted out to new highs once again for the year. And it's still possible we could see last year's highs approach. Pullback should be contained from here. It would appear that the area, the band of support we're going to be looking at early next week would be 121 to 121.50. As long as we remain above that, it remains innocent till proven guilty. The semiconductors did not make a lower high and lower low below the 5-day moving average. The 5-day moving average was declining over here, so it didn't start to decline until this point. I was prepared to be negative on this market if it made a lower low below that and then put a stop above. Instead, the market recovered. It got back above this prior little band of support in here, and now we are once again at closing highs for the semiconductors. This is the highest they've closed all year, and they've had a great run, and they continue to be in a bullish position that should support further upside. Next week, this is going to be a very important level down at 62.50. If we break below that, then we have to reassess. And again, the market is constantly giving us new information to look at. The biotechs, as we know, this was the potential level of resistance. And what did we see? We saw zero resistance there at all. There was no sign that the sellers were gaining control. We pulled back a little bit, but still above a rising 5-day moving average, and finished the week out near the highs. Now, this market's getting extended from 240 to 300 basically is what we've seen. So a 60-point move, that's a heck of a percentage move without really catching its breath. But you can't short it while it remains in an uptrend with higher highs and higher lows. Next week, this is going to be an important area, near about 288 to 290. And of course, keep in mind that is also where this level is in here, is that this is 290. So if we pull back down towards that level, it's likely it will hold as support. Apple continued to move higher this week, and the volume weighted average price from the earnings has held throughout. I was ready to become more defensive about Apple over here if it did something like this, but instead it continues to ride that rising 5-day moving average, and this purple line is the volume weighted average price since the earnings report, which is now down at about 105. So great week for equities, and bonds pulled back a little bit. They're still holding above that rising 50-day moving average. We spoke about being bullish on these last week, and now they've broken down and they've made lower highs and lower lows. They're below a declining 5-day moving average. It seems as though the bonds need to settle down a little bit. Ideally, next week they will hold above this rising 50-day moving average, and even if they break down below the 50-day moving average, it's the 50-day moving average is still rising. So we're going to remain optimistic about bonds, but there's no reason to be positioned in them right now from an intermediate term standpoint, but our bias is still to the upside in there. Let's talk about Twitter, because everyone likes to talk about Twitter. It closed its gap from the earnings, so that's a positive after the stock came down to the rising 50-day moving average. But now where it is it has the potential to find resistance in this area. We've had a nice run up in here, and when you look at the longer term time frame, we're right up against the declining 200-day moving average. When the 200-day moving average is declining, it typically means that the stock needs more time to heal, and as it said, if they don't scare you out on the way down, they will typically wear you out. It doesn't mean that you have to be bearish on this stock, but it means that it's likely that this back and forth action will continue in this stock, and and we'll see what happens from there. I wanted to talk about Alibaba again because Alibaba continues to flirt with the volume weighted average price since the stock came public. That's the purple line there. And if I draw it properly, you can see that we are still kind of stuck at that. This volume weighted average price since the IPO, this is the average price the stock has traded at. The difference between this time that it came up to the level is that now we have this higher low right underneath it. Now this company is due to report earnings next week, so be careful about that. But it certainly looks like the more time, this could be a case of the more times resistance is tested, the more likely it is to break through that resistance and to continue back to the upside. So I hope everyone had a good week of trading and you didn't get caught trying to fight the dominant trend that's been here. And I will talk to you again next week. Thanks for tuning in.